Welcome to Daily Rates Live with the Mortgage Calculator. Good morning, everyone. We'll wait just a few minutes here to get started, but what we're going to do today is go over some live mortgage rates and then do a deep dive into a topic here, and we'll get started momentarily. Give us just a minute here to go live on all the different platforms. We are streaming this on YouTube, Facebook, and LinkedIn, so let us go get up and running on all the different platforms and give everybody a chance to tune in, and then we'll get started. As you jump on, feel free to drop a comment there in the chat. We appreciate everybody's comments and everybody tuning in early. I see Owen was already commenting. Dario, appreciate it. Shout out to the whole Mortgage Calculator team tuning in. And we'll get started here shortly. Warren, thank you for the comment. Sandra, Jason, appreciate you all tuning in and commenting. Raul, Andre, thank you for the comment. As we go through here with the presentation today, feel free to keep dropping comments and drop any questions that you have. As we go through our deep dive topic, we're happy to answer any questions that you want to drop there in the chat. With that being said, it looks like we are live on all the different platforms, so we can go ahead and get started. We'll take the chat off the screen and we can get into it. So welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do on this show every weekday at 11 a.m. Eastern is go through live mortgage rates for different programs. And then we do a deep dive into a different topic every day. Now, today's topic is something we're very familiar with here at the Mortgage Calculator. This is what we specialize in, is self-employed borrowers. So we have plenty of options on the non-QM side that will definitely be going through some of those today as well. And then, of course, there are regular, conventional, self-employed options as well. But at the Mortgage Calculator, we specialize in non-QM loans. We specialize in dealing with self-employed borrowers and investors. So our sales manager, Jose Gonzalez, with 28 years of experience, is going to do a deep dive into self-employed borrowers a little bit later. But before we go through that, let's do what we do every morning, which is pull up the live mortgage rates and see what it's looking like for the different programs. So Nick, let's go ahead and pull up our pricing tool and look at what the market is doing here today.
All right, switch my screen and we'll check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates for today, August 23rd, just after 11 a.m. All of our standard programs are live. It will show us the rates and the APR. If you'd like a full breakdown of all the fees that go into the APR, a full loan estimate, please get with our team members. We have over 300 licensed loan officers in 24 states for primary home loans, and we can do our business purpose loans in 44 states. So for the demo, as we do every day, we'll set up a standard scenario, a $400,000 loan amount. We'll set an LTV of 80% loan, 20% down payment. We will set desired price of $99. We'll ask the computer to find the best rate at one discount point in cost. And we'll compare our different programs. We'll start with conforming conventional. Then we'll check out our FHA options. And then we'll go into our expanded guidelines, also known as non-QM, where we can use alternative income, especially for our self-employed borrowers, which is our topic for today. We also offer VA and USDA. That's only for our eligible veterans and active service members for VA. So if you are eligible, let us know. And USDA is only for eligible properties. If you are shopping for an eligible USDA property, let us know. We can quote it, no problem. We'll start today with conforming conventional, purchase, 30-year fixed, standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with the same settings we do every morning, let's check out the live rates. I think that's a touch cheaper than it was yesterday, but obviously we're still higher than we would like to be. 7.5 rate, 0.875 discount points and costs, final APR 7.662. So remember, we use the APR to compare across programs. That is the final cost, including all fees. Now, if our customer doesn't qualify for conventional for any reason, we'll set up the same exact scenario so we can compare typically the next best option, which is FHA. FHA allows a little more leniency on credit issues as well as a higher debt to income ratio. So with everything else staying exactly the same, let's check out the FHA options today. All right, I think that went down just a touch as well. 6.625 rate, 1 discount point in cost. Final APR 7.217. So FHA is quite a bit cheaper than conventional today, just because the rates are going a little bit crazy. So our customers that qualify for both, definitely check out FHA. Final APR here is a little bit cheaper. And for customers that must use it, the recent changes to the MI are definitely helping us out here. Now, where we specialize is if our borrower doesn't qualify for either FHA or conventional. Many other banks or lenders don't have other options. But we have over 5,000 additional options here under expanded guidelines, also known as non-QM, where we can use alternative income. So everything else will stay exactly the same. However, we have a new option pop up now with non-QM for income. So full docs, what we use for conventional and FHA, that's 2 years of tax returns, what most people are used to. So we'll typically choose this option to use an alternative, such as our asset-related programs, business bank statement programs, our investment programs we'll talk about here in a minute. Personal bank statement 12-month is our most popular program by far. That's what we use for the demo. We also have RSU, stated, VOE, 1099, P&L, and no income CDFI options. So for the demo, we always choose our 12-month bank statement option, which is the most popular for our self-employed borrowers, which again is the topic for today, as Jose explained some other options. Now, many times our self-employed borrowers, when they submit tax returns, 2 years of tax returns, will have various write-offs and may not qualify at all, or may not quite get as much income as they need to get the home they want. So in this case, instead of using tax returns, we're simply going to use their last 12 bank statements, no tax returns involved at all, to determine a debt to income ratio of 40% in this example, using just their cash in the bank. So most of our self-employed borrowers will qualify for double or more income. So let's check out the bank statement options this morning. So the best option here at the top, 7.5 rate, 2.875 discount points and cost. These programs do cost a little bit more, but our final APR, 7.629, is almost identical to conventional here for this one special program. And we have dozens, if not hundreds, of different variations of the bank statement options. Some of these at a little bit higher rates and costs may allow things like credit events, like foreclosures and bankruptcies, and other items that would otherwise cause us to not qualify. So we can get around not only the income issue, but tons of different options here to get around other possible issues that may come up. So today and the last few days, non-QM is almost identical to conventional. So great option here for our self-employed borrowers, which is the topic for today. Now, before we get into Jose's examples, let me do our final live rates here for some investment property options. So when we switch to investment property, we'll set up the same scenario, 80% loan to value, 20% down payment, and we'll compare our two options for investment properties. We have conventional options as well as our non-QM options, expanded guidelines. Remember, government programs, FHA, VA, and USDA are not eligible for investments. So we'll switch to conforming conventional. All we've edited here is the occupancy. Everything else will stay the same as all our other demos. So we can compare what the conventional programs have added for an adjustment for an investment property. So, ouch, today it's even higher than it was yesterday. Again, these are probably not compliant rates. Fortunately, they've actually raised the rate sheet here a little bit, Jose, finally, to help us out. But we're still probably not compliant. The best option here the computer found, 7.625 rate, 4.875 discount points, is probably not compliant. But it's a good example here. Puts our final APR somewhere around 7.921. So a good option for our customers that qualify conventional and want a really low rate. But this discount point amount is probably not compliant, and most investors would probably not want to spend $19,500 in costs in order to get this rate. So unfortunately, conventional for investment properties at high LTV is probably not feasible at this moment because the computer can't find any higher rate options. But that's where we definitely recommend our customers for investment properties check out the non-QM, which will solve many problems. So we'll set up the same scenario, investment property, 80 LTV, and this time we will select expanded guidelines, also known as non-QM. And the first thing we need to edit here is the income verification. So the most popular option for investment properties is going to be our DSCR option because it doesn't require any income or employment or anything from our borrower. We simply use the estimated rental income from the property, in this case we're purchasing, to determine a DSCR, debt service coverage ratio. If the estimated rents can cover the PITIA, the mortgage payment and expenses that we're proposing here, that's a ratio of 1.00 higher, aka the property cash flows on a monthly basis. We also have options for under 1.00, aka the property does not cash flow on a monthly basis. Tons of different options there. For the demo, we always do 1.5, which is the highest, so we can see all the options pop up. We always choose 3 years for a prepayment penalty. That is standard for investment property non-QM programs. However, there are options for 0 that will limit the loan programs and cost more. And there are options for 5 years, which will save us some money, but not all loan programs allow it. So in order to show all the different options, we'll choose the standard 3-year as we do every day. So let's check out the DSCR. Wow. Jose, 7.875 rate. Our DSCR non-QM rates are going down. Conventional is going up. First time in history here, we have a DSCR loan for 7.875 rate, 0.975 discount points and cost. Final APR 7.941, less than conventional. First time in our live show history here, guys. We have DSCR loans for cheaper than conventional. Definitely recommend our investors jump all over it. Our DSCR end investors are obviously wanting these loans, very popular. So that is amazing. We also have a ton of options here for DSCR. Some of these a little bit higher rates and costs may allow things like foreclosures, bankruptcy, like we mentioned before, and also may allow short-term rental income. Very popular requests we get for rental properties. So tons of different options. Please get with our team. They'll find the one that fits best for you. Now, let me switch my screen and we'll go into our deep dive today, which is going to be self-employed borrower loans. So every day when we do the live rates, we always do a 12-month bank statement example, which is the most popular example. And we always do it at 80 LTV, which is the most common LTV. However, Jose will have some different scenarios and examples for LTVs and programs for our self-employed borrowers. As we went over yesterday, self-employed borrowers can also be first-time home buyers. So yesterday's program does apply for anybody that's definitely a first-time home buyer looking for a little extra bonus there. But today we're going to focus on the different tips and tricks and differences for our self-employed borrowers. So let me make it big here, Jose, and you can go ahead and take over.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Amazing there, Nick, on those DSCRs. Looks like the money is funneling into non-QM, even in the secondary market. They're a little bit uneasy with all of the knee-jerk reactions happening right now. So they're actually seeing more stability in dealing with our investors and our DSCR investors, and they are dealing with the agency money. That's amazing. But we've been seeing that trend happening now for like a month or two. Non-QM rates have been dropping as there's more competition in the secondary market for our products. So that is amazing for all of our investors. We love it. And at the Mortgage Calculator, we are perfectly positioned to have all of our borrowers take advantage of this amazing economy of scale. So make sure you reach out to our team so that we can quote you all of those investment deals that you thought were slipping away because of all the craziness happening in agency, when we have plenty of opportunities for you. And I'm going to share those today because I have a number of different options in our different income streams, from the traditional full doc non-QM product to the esoteric products, our DSCRs. Now we are here now dealing with our true investors. We are assuming in all of these examples that they are closing in an entity. The most popular entity to be closing in is an LLC. Um, so we do not have any conventional options for you today, but we do have plenty of non-QM options with nice, amazing rates. I'm sharing 1 unit options and our favorite 2 to 4 unit options. So let's jump right into it here. Here we have with only 15% down payment. I say only because if it was possible to do this on a conventional loan and obtain compliant pricing, you probably would be looking at a minimum of 20% down. In this case, we're looking at 15%. And this is all of the examples I'm doing here are with a 3-year prepay, but you can opt for a 5-year prepay and get a little bit better pricing, which would translate to a lower rate if you wanted to keep the same pricing. So here on our 1 unit purchase was 15% down. You're looking at 9.499 as your lowest cost option, and you can buy it down all the way to 8.375%. That's for a 1 unit. Now, for our 2 to 4 unit, our investors love to get those small residential multifamily properties. We have the same rate. There is not a loan level price adjustment with our best sources for this product. So again, you're looking at 9.499 as your lowest cost option and 8.375 as your lowest rate option. And keep in mind, the examples that I'm actually using for the 2 to 4 unit when I'm pricing this out is for a 4 unit property. So I'm going straight to the ultimate house hack. So any of the rates that you do see here when it's 2 to 4 unit is actually for a 4 unit property. If you were trying to do this via the agency route, I think the minimum down payment on a 4 unit, I believe, is like 25%, something like that. But here, 15%. No mortgage insurance, too, shall I state on that. So that's some additional frosting there for your cake. So now we have here a bank statement option, right? And remember, these are not this is not for primary. These are investment properties, right? So here you're looking at 15% down for the 1 unit purchase using either personal or business bank statements, or we can actually use a combination of both, depending how you are structuring your deposits. Again, amazing, 9.499 as the lowest cost option and 8.375 for the lowest rate option. For our best options here, as you can see, there is not a loan level price adjustment when going from full doc to bank statement. So we get the same amazing options. So now on the bank statement side, when we do go to 2 to 4 units, there is an LTV adjustment there because it is an investment property. If we were going primary, we could go the higher LTV. But here, still amazing rates because you're looking at with 20% down, using bank statements for your investment, 2 to 4 unit purchase. 8.875 is your lowest cost option with a $500 lender credit. And you can buy it down to 7.375. That's incredible there. 7.375 as your lowest rate option. And that is, again, I'll remind you all, 2 to 4 unit bank statement purchase with 20% down. And if you were to opt for the 5-year prepay, again, you would get a lower rate. Now we go to profit and loss. Now remember, these are all self-employed borrower options. Okay, so profit and loss is another option for our self-employed borrowers. It can be either a 1-year or a 2-year history. In this case here, I'm going with the lesser restrictive 1-year history. If we went with the 2-year, there would be a little bit of a decrease in the cost, but we're going with the 1-year option here, and it's only 15% down. And look at those rates, right? Again, 9.499 as your lowest cost option, 8.375 as your lowest rate option. And now again, our 2 to 4 unit property purchase using profit and loss report, 1-year report. This does require 20% down. When we're going to the 2 to 4 unit property, there is a 5% LTV adjustment due to the property type. And we are looking at, again, amazing 8.75% that's a par rate, lowest cost option. And you can buy that down to 7.5%. And I'm going to tell you, you could probably buy it down a little bit more than that and still be compliant. But here we're looking at 7.5%. And now, last but not least, even though the DSCR loans are not for investors, not for self-employed borrowers, we do have a lot of self-employed borrowers that are investors, and the DSCR would be the best option for them. If you can't fit them into the full doc bucket, you can't fit them into the bank statement bucket or the profit and loss bucket, the DSCR is the amazing one here that we're looking at. And this option is with 20% down. We do have a 15% down option that I didn't quote for you today. The rate on that is in the high 10s. But this one here, I wanted to show you the great rates because this is the same 20% down and same rate for a 1 unit and for a 2 to 4 unit, which is the reason why I picked the 20% down bucket. But you're looking at 8.125. Now, this is what Nick was showing you earlier, as offering a $100 lender credit. And you can buy this all the way down to 7.25%. So if you did notice, I wanted to show you something here in a minute, right? So here you're looking at profit and loss, right? On a 2 to 4 unit property. And here, which is 7.5 costing you $10,000. And here you're looking at 7.5 costing you $8,900 on a DSCR, and 7.25 being your lowest rate option. Now, mind you, the property does have to cover 1.0 or above for this DSCR option, but assuming it does cover 1.0 or above, it would probably be a much cleaner loan and a much smoother experience for everyone, especially your borrower. If you don't have to have your borrower ask their accountant for the P&L and for a business narrative verification letter and all these things that would be required to go this route, or that would be required to go this route. Right here, 7.5, which is 7.49, essentially is costing $12,500 on the 2 to 4 unit. And here on the DSCR, again, the 2 to 4 unit and the 1 unit is the same. No loan level price adjustments, you're looking at $8,900. So again, we love going the DSCR route when the debt service coverage ratio does cover. The only reason you would not go DSCR with your investor usually would be if the debt service coverage ratio would not cover, because apparently there is a lot of movement in the debt service coverage ratio secondary market, as you can see by these amazing rates.
All right. Looks like we do have one question here, Leonardo. The question is, loans and LLCs are going to be DSCR in most cases, right? I guess it's kind of backwards from that, right? Is that DSCR loans will be in an LLC in most cases, but there's all kinds of loans that may close in an LLC.
Right. The main thing to note is that you would not be able, if you have a borrower that stipulates that they want to close in an LLC because of all the different benefits to closing an LLC, like limiting their liability and opening up other tax strategies, tax management strategies for them. You would have to usually close that in the non-QM space. I don't believe that conventional yet allows closing the purchase in an LLC or the refi in an LLC. So you would have to go the non-QM route. Debt service coverage ratio loans can close in a personal name or can close in an entity. It doesn't have to be just an LLC, even though that is the most common entity. It can be an S Corp, it can be a C Corp, it can be a limited partnership. So, but don't assume that just because it's a DSCR that it has to close in an entity such as an LLC.
Right. Most of them do, but definitely not required, and it's not the only route to go. It looks like that's it for the questions. You can always visit us at themortgagecalculator.com for more info. Remember, we do this show 11 a.m. Eastern every single weekday where we go through the live rates and do a deep dive into a different topic. So we'll be right back here tomorrow with a new topic to go over. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Everyone, have a great day.
Thanks, everybody.
Have a great day, everybody.